Alright, this is going to be a live trading video. It's the first one I've done. So, got a clean setup shaping up right here. I'll show you it on TradingView. We've got an untapped zone, got a nice low taken out, and this is a new 1 hour candle creating a bottom wick into our zone. So now all I want to see here is the candle close outside of the zone respecting, and I'll enter with my stop loss 1 pip below the entry candle, or if it flips, just below the candle. So that's what I want to see play out here. And we've got it up here on the live markets. It's rejecting really nicely at the moment, and if this trade ends up winning, I'll do a nice breakdown at the end of the video. Alright, so it looks like we could be getting a flip entry right here. So only take flip entries on new higher time frame candles, so a new 15, a new 30, or a new 1 hour candle. One thing that's really important with these is that you actually wait until candle closes, because on the lower time frame, really the formation of the candle doesn't mean anything. That was one mistake I used to make a lot when I first started. I used to just enter based off a 5-minute candle rejecting a zone, and then the candle would close and it wouldn't be rejecting at all. So that's one thing with lower time frame trading that you have to be aware of. So yeah, right now there's 40 seconds left on this candle. It's looking really good at the moment. Flip entry. So we got the flip entry. I should have probably had a market order on the flip. It is what it is. As you can see, it's really effective on the higher time frame candles entering flip, because they can just drive really quickly, and if we waited for it to close, you might miss the whole move. So I moved the stop loss to below the candle quickly as it was a flip entry, and I'll update you guys on how this is running. Alright, so how I set my TP is on TradingView. Take it right here. This was a flip entry, so I do it off the best entry that I should have had, which was right here on the flip. I forgot to do a market order, likely because of the video I was making, but that's fine. So my stop loss just comes below the candle on a flip instead of 1 pip below the entry candle, and my TP is based on rules. So for a 6.5 pip stop loss, my RR is always 1 to 2, so I'll target 1 to 2 right here, and I'll show you what my rules actually are. I'll update you guys how it's going once the trade's played out. But yeah, right now this is looking really clean. It's looking like TP could be hit within 1 or 2 candles here. This is the thing about this strategy, it's always extremely high momentum away from the entry. It's very fast. On a new 1 hour candle, right, you can expect volume, and the point is that I'm only trading once liquidity's already been taken, once lows have been taken out, once people have already lost. Let's say they do support and resistance, supply and demand, all these lows have been taken out before I enter, so people have lost already and it's ready to move away with lots of momentum. So yeah, looking good at the moment. I'm only doing 0.25% risk right now because I've just started with the 5ers for the first time, and I'm going to see what it's like to be with them. I'm doing the bootcamp program. And so what I do on any funded account is I take 0.25% risk until I'm up 1%, and then I'll switch to 0.5% risk, and then when I'm up 3%, I'll switch to 1% risk. So that's how I manage prop firm accounts. Now this allows me to just have a buffer. Obviously you wouldn't be able to do this if you had a time limit, which is why low time limit ones obviously allow you to do realistic trading. I wouldn't want to be doing 1% risk every trade with the 5% drawdown, or 6% I think it is, that the 5ers have on the bootcamp programs. Right, a new 5 minutes just opened, extremely bullish close for the first one, and the new one's opened and it's creating a bottom wick first, which is a good sign. Hopefully it will just fill this gap to here and then continue to push up. So there's one thing I forgot to do, and that is set the auto break even. So I always have auto break even set at a 1 to 1.75. This just means if the trade was basically right next to hitting TP and then it reversed, I wouldn't be taking a loss for no reason. This 5's come down pretty deeply. You can expect that after a massive push like this. So yeah, still confident in this trade. Still looks like it's going to play out nicely. Alright, quick update. We've ended up pushing back down massively on this 5. That was quite unexpected, but we're here on a new 15-minute candle, and It's retesting the zone, it's rejecting again nicely. If this one closes bullish, I'll probably look to enter another half position, a little bit lower down. So yeah, I'm used to this with this strategy. Not normally like this, but what I will say is a lot of the time, once the first candle rejects, the second one often comes into drawdown and makes a bottom wick into the zone again and then pushes up. So I'm used to candles retesting the zone a lot, but I still have full confidence in the trade when that happens because the zones that I'm taking this from are very high quality zones. That's the reason that I take them. They always tend to hold even if it's a retest, anything like that. And another good thing about this strategy is if I lose, it's always instant. It's never really a good movement. If it comes back down, it will retest the zone and respect. If I lose, it'll just be straight away, probably within a couple of minutes, and I'll be done for the session. So that's that. I did have market orders right here, I believe, to re-enter close to this 15-minute flip. So I should have been filled on those. Let me check. Yep, so I got filled on those right here. Another half a position. Next 15 tested the zone, respected. Looking to continue to TP right now. One of these will be the auto break even and one will be the original TP. Now I'll probably just fast forward to whenever the trade's finished, and I'll give a full breakdown of why I actually took the trade and why it's a high quality zone as opposed to a low quality one.
5 minutes later.
Alright, so we're getting close. I'm going to let you guys hear my favourite sound, the auto break even sound. If you use magic keys, you know what I'm talking about. That's my favourite sound in the world. Close massively bullish right here. Let's see it on this next candle. There we go, bottom wick. Let's see that flip. We hold through that reflip. Even though it seems so simple, it took a lot of time just to be able to do that. It went bullish and then it reflipped again and started going bearish. Now in the past, I definitely would have closed there. There was no chance of me holding this close to TP. Obviously now that I've been trading quite a long time, I really don't care about what happens. I'm not emotional anymore about the trade. Right, it could come down here, it could do whatever it wants. I'm still going to hold it. Now, the only way I'll close is if it actually closes in the zone. So that would have to be right here. Let's say it closed on this line. Then I'd just be closing full. And another thing I want to say is the extra positions that I enter right here, I would not recommend doing that until you know that you can completely handle any loss. Now, if you did put in extra positions you ended up losing, that's obviously going to be a lot harder on psychology, so definitely don't do that unless you're getting advanced. This little bit of drawdown, I would say it's probably because this is the 25-minute candle. Just a bit of a reaction before a new 30-minute opens, right? You can expect that a lot. Or just a normal bottom wick, right? Doesn't matter how you justify it. So yeah, we're really close here. Auto break even and TP. This was a very clean trade. Also, it's a very good example of holding through drawdown. Obviously, I'm talking like it's already won. I completely expect this to win. That's another good point. Is that when you're in a trade and you're winning, you shouldn't be fearful about losing. You need to be optimistic about winning and it hitting TP. If in your mind, when you're in profit, you just care more about the trade maybe losing, then that's the opposite of what you're going to do. You're going to be closing your positions early, all sorts of bad stuff. So optimistic in winning trades and cutting losses early in losing trades. So yeah, coming up to auto break even sound right here. Come on, man. Here we go, let's hear it. Favorite sound. Really. Here we go. After all that, you didn't hear it properly because my speaker's too low volume, but yeah, TP hit right there. Super clean trade. This can be a cold video. Another thing I want to say is, with these live trades, obviously, with these live trades, even if it's a loss, I'd still show the trade because I want to be transparent. and this channel is going to have real trading on it. I'm not just going to be only showing wins, anything like that. Let me break down this trade and show you what I was seeing and why I took this. So first off, hopping into the replay, I just want to say we are in a downtrend on GJ. So how was I able to take this position? Right, so the main thing is we need to have an untapped zone. What I mean by an untapped zone is that no candles will come back into the zone after it's been formed. So right here, as you can see, if I move the box quickly, so we've got this strong demand, this push up, and it broke this tiny high right here. Draw the zone on the previous candle. Now untapped zone means no candles are... Oops. Right, I don't know what just happened. Okay, so as I was saying, zones where no candles will come back to it are extremely effective compared to ones that have had candles in it before. We need liquidity close by the zone. So right here, it was extremely close. A low right here, some lows right here. That can be taken out before tapping into the zone. So a lot of beginner traders, right, they don't look for untapped zones. They might say this is a strong demand zone. Now it's not bad. They could enter, right? You see it rejecting a lot. They enter, and the target would probably most likely be new highs or this supply zone. And so they wouldn't win. They get stopped out down here. Liquidity generated. Now I'm only talking there about supply and demand traders, and also not that retail traders can actually make a lot of liquidity. Obviously they can't. But these major lows right here, this big low being taken out, and also the big retracement is enough for when people they say, oh, I've just been stopped out and then the trade went in my direction. Well, this strategy is sort of taking advantage of that. People lose right here, they get stopped out at these lows or whatever, and I'm waiting patiently here for the real trade with a deeper pullback, which means it has more potential to go higher. Obviously it has deeper pullback, which is how I can target higher than 1-to-1 on supply and demand. So next thing is, it needs to come to the zone and reject, not close in the zone. If it closes in the zone, it's instantly invalid for me and I wouldn't take the trade. So right here is a new 1 hour candle, which is again, it's another confluence. A new higher time frame candle making its bottom wick into the zone means you've got higher time frames on your side ready to push up even higher, which is why, as you saw, there was so much volume in my trade and it just exploded upwards. So enter flip, as it's a new high time frame candle and you don't want the trade to just take off without you. If it wasn't a new high time frame candle, you wait for the close every time. 6.6 pip stop loss. I've got my rules right here. Already explained that, I think. TP based on that. That means it's a 1-to-2. So now with this retracement, if it was just, let's say this candle closed right here, it went a tiny bit up, then just came down to the zone, I wouldn't be closing the position, but I would not be adding extra positions. The reason on this one I did add extra positions is because the initial reaction was so strong. That's just like an 100th confirmation that this is a strong zone. I already know it was before that happened because they're the only ones I trade off. And so we got that reaction. We come back, it has to be a new high time frame candle, which it was, a new 15-minute. It was rejecting, it flipped, took advantage of that, and then the rest is history. So the full TP, I'm on the trade. Now this is a very good example of drawdown. I can tell you right now, there's a 0% chance if this happened in the past of me holding this trade. Even as close as like 5-6 months ago, if it didn't go straight to TP, maybe it draw down to like right here and continued up, a candle like this, I'll be closing immediately. I would not have had the psychology to trust in my setups. So that's a great example of why you should never close when you don't need to. That was a great live trading video. Very good trade. Let me know if you want to see more live trading videos. I will be uploading wins and losses, like I say, and weekly breakdowns at the end of the week. So yeah, if you enjoyed the video, leave a like and I'll see you guys later.